Good evening, ladies and gentlemen. Welcome to Business Today Television. In our ongoing series of how to tackle and invest in markets at record highs, we bring to you instruments and products which harness the magical qualities and compounding nature of equities and provide you with fantastic long-term wealth and returns with the least possible effort. In this connection, we today present international funds which should be a part of your overall exposure to equities, and welcome Mr. Pratik Oswal. He's the head for passive funds at Motilal Oswal Asset Management Company and has been a shining beacon for this sector with his very popular fund, the Nasdaq 100 ETF. This fund is about 12 years old. It has given a fantastic compounded annual return of about 22% each year and has been the darling of long-term investors. Mr. Oswal, welcome to Business Today Television. It's a pleasure to host you at a time when both the Indian as well as US markets are perhaps in the best phase that we've seen over the last 20 years. How do you feel?
Thanks, Shail for having me on the show. Looking forward to our conversation. Yeah, it's been a great year. It's been a great turnaround from what things were last year.
Absolutely.
I think things are looking up in a very big way, both in domestic as well as international markets. I think even investor have been, I would say, positively surprised by how the markets have behaved. So overall, I think the beauty about this is something which we've also done a study, which is very interesting. So we studied bear market cycles the last 3 decades, and what we've seen is that the average bear market has come down from almost one third of your time in the 80s and 90s used to be in bear markets. That's come down to less than 1 month in a year.
Wow.
So I think recovery markets have been phenomenally well. We saw it the same during COVID. Even this year, we've seen a very similar recovery in the US market. So overall, I think bulls are sort of definitely getting a lot more prominence.
Absolutely. And when money moves seamlessly across financial as well as national borders, and a time when everything has turned digital in India, I'm sure you are having a great time. So let's break this show into 2 or 3 components. Let's first discuss international funds and why are they necessary for HNI, ultra HNI and other investors, and then drill down into, of course, the fund that you've managed so beautifully over the last decade or so. So my initial questions are, international funds are a relatively new segment that we've seen flourishing very well in India. How do you see their growth over a period of time, and why is it that initially we have international funds that are focused mainly on the US markets? Of course, newer ones are looking at the Asian geography too.
Yeah, I think the thesis comes from portfolio theory. I think if you look at most investors outside of India, so if you look at investors in the UK or the US or even Southeast Asia, you'll see that a lot of their portfolio is devoted towards companies and stocks outside their home country. And I think in India this was not the case, but I think today people have realized that a part of your portfolio should be exposed towards stocks and sectors and companies outside of your home country. And what we've seen in the US markets in the last 10 years, 15 years, I think the potential to wealth creation is very, very high. I think I do believe that yes, US is 60% of global GDP market cap. So I think international investing is a category. The first obvious market that you can look for is the US market, because you're looking at the biggest market, also a very fast-growing market. The second thing to why I think US markets are important is because it's one market where you have global business models. If you at just the S&P 500, which is the top 500 companies in the US, about 60%, 55 to 60% of their sales is actually happening outside the US. So I think when you're looking at global investing, you want to buy global stocks. And the center, the exchange or the country which holds the most amount of globally diversified business models happens to be the US, which is why I think US tends to be the first category. And now obviously, once you have the US in your portfolio, I think it makes sense to add, say, emerging markets or developed markets. But I think US tends to be the most popular because of how well diversified its capital markets are.
And the fact that amongst the largest trading partners that the United States has, one of them is in India. Of course, we've seen a dramatic rise in how software exports to the United States have grown sharply over the last 30 years or so, as also the Indian diaspora that's there, both in terms of the business that they manage, as also in the colleges that they study. Let's take this discussion forward, Pratik. Uh, when you look at international funds, and share this with our viewers, that there is an additional kicker that these funds get, because traditionally we've seen the rupee depreciate definitely versus the US dollar, as also weaken against several other currencies. So there is a kicker involved apart from the fantastic return that the underlying index already gives. Please explain that.
Yeah, so buying international equity, you're actually buying not one but two asset classes. You're buying US stocks, and you're also buying US currency. And what we've seen is that the currency, the
Can you show the
INR,
return one?
tends to depreciate by 2 to 4% every year over the last 15, 20 years. So I'll give you an example. 2 to 4% might not be a big number, but actually, if you look at the numbers, the NASDAQ index, for example, the fund in question, if you look at just the NASDAQ index in the US, over the last 15 years' time, it's actually gone up 6 times. But if you convert this in INR, it's actually gone up 12 times in India. So that is
Absolutely.
so I think you're looking at the INR depreciation. So you're buying a US currency, which anyway is a good thing because increasingly as customers we are traveling abroad, we are buying more goods and
Comparative
services
return.
in the US. So I think our spending is also in line with the US dollar. So I think it makes sense to have some of that in your portfolio. And lastly, also, and this is something that people also don't realize, but the dividend payments in the US companies tend to be a lot higher than Indian companies. You're looking at close to 1.5-2% dividends every year, which also adds up very meaningfully to your portfolio. So I think if you combine dividends, the US currency as well as US stocks, I think it's a very good value proposition for anyone who's looking to create wealth in investing internationally.
Let me share a graphic for you, Pratik, and this underlines what you are trying to say. If we can show the comparative returns, CAGR percentage of both Motilal Oswal Nasdaq ETF and the BSE 500 return. Yes, this is what needs to be seen in great detail. The BSE 500 on a 10-year return, we need to change this graphic. It's actually 15.3. But just look at how widely returns have outperformed on the ETF, because this is a dollar denominated asset that you buy, and you get the free dollar depreciation versus that you see in a normal equity fund. So over a 10-year period, the NASDAQ ETF has returned 21.2%, and the BSE 500 at the same point of time has returned 15.3%. The difference that you see is the rupee depreciation versus the dollar, and you are compounding this 5% over a 10-year period. That's the kicker that these international funds give to you, provided you hold them for the long term, and of course a good SIP in these funds matters. Pratik, if you were to construct an international fund portfolio for our viewers, what are the 2 or 3 funds that you will have?
Yeah, so I do believe that obviously as Indians we understand our markets very well. So we understand which funds to choose or which stocks to buy because we understand the markets, and uncertainty can be taken with a lot easier than what happens in the US. So we believe that when it comes to international allocation, we really want our investors to keep it very simple, and we believe that the index-based strategies make a lot of sense for international investing. I think if you look at the S&P 500 or the Nasdaq, their track records span from the 50s, 60s, 80s. So I think you can really make life very easy for you by just selecting a low-cost index fund or an ETF
Absolutely.
for your portfolio. Also I think you're obviously getting low cost, and also what we've seen is unlike in India, in the US, ETFs and index funds tend to outperform most other funds out there. So you're not
Absolutely.
only buying something which is very efficient, you're also buying something which has the highest returns. and also, you're not really taking a lot of risk in trying to decide which stock to buy or which fund to buy. It's basically the S&P 500 or the Nasdaq index is, I think, the two most
Absolutely.
popular funds in the world, and I think that makes life very simple for our investors.
The other thing I wanted to share with our investors and potential viewers in this particular category is that apart from you getting an extra kicker in the form of dollar appreciation or rupee depreciation, an index traded fund has a lower cost when it comes to overall fee, and of course it's available with your broker, so you can just give him a call or even set up a monthly SIP automatically and buy it off the exchange. Another big plus is, of course, that if you're looking to raise funds against this particular ETF or any ETF for that matter, you get loan against that particular ETF too. Let's discuss, Pratik, now the percentage that you would want Indian investors to invest in international funds, presuming that the overall portfolio is for about 10 lakh rupees in the mutual fund category. How much would you want the international funds to be?
Yeah, so this is very important. We obviously talked about, wealth creation in the international domain, but actually, one of the key reasons to why a lot of our investor base invest in sort of international funds is actually portfolio diversification. What we've seen is that, Indian markets and US markets tend to move in very different directions. So when you're having a Nasdaq or an S&P or any other international fund in a portfolio, you're essentially getting very similar returns than what you would get in India, but your risk is coming down dramatically. So for example, 2000 to 2010, Indian markets did very well, and 2010 to 20, the US markets did really well. So I think by having an international fund in a portfolio, you're essentially lowering our overall portfolio volatility dramatically. We believe that the only way to reduce portfolio volatility is to buy other asset classes like gold or maybe fixed income. But the problem with that is that you're giving up return for lower risk. International equity is one such asset class where return is exactly the same or maybe higher, but risk comes down dramatically. So we believe that portfolio diversification is very important, and international is an asset class that should be there in our portfolio. So we believe that out of the 10 lakh rupees that you're looking at investing, I would say, at least, 1.5 to 2 lakh rupees is something that investors could look at investing in international stocks or funds. The reason why I say 50 to 20% allocation, because then if you're allocating say 50,000 or 1 lakh rupees, then diversification doesn't the impact of diversification does not come in your portfolio. So then you just some fund in your portfolio. So I think for diversification to play out, the investment needs to be meaningful, which is why 50 to 20% is something I say is good enough to start off with for your international diversification. And overall, I think it really improves your portfolio in a very big way.
Okay, and I just like to add another line in terms of investment thesis. So this has to be a return. This has to be an investment that exceeds at least a minimum of 5 years. That way, you will get 2 or 3 industry cycles, and more importantly, the lower the index falls, the better your SIP works. So keep this in mind that if you're putting money in an international fund or any fund for that matter, invest via the monthly SIP route and let it run for about a period of at least 7 years to see the beauty of compounding, as also the fund manager's discretion in terms of which stocks to buy. Pratik, now we'll touch upon the second half of the show and discuss Nasdaq 100 ETF, which you have so admirably run over the past 10 years or so. The net asset value today is about 123.4. The all-time high is somewhere like 138. This particular ETF mirrors the Nasdaq 100 index in its totality, and of course has 100 stocks, and has been the best performing equity fund over a 12-year period. Pratik, what next? I know it's a passive fund, but how are you managing the volatility that we've seen in the Nasdaq over the last 8 odd months or so?
Yeah, so I think Nasdaq index over the last 6 months have really surprised people. I think if you look at the index, the way that's constructed, it's basically you're betting on innovation, you're betting on growth-oriented industries, and you're betting on sectors where we see a lot of future value coming from. So I think what we've seen over the last 6 to 8 months time is the sort of growth that is seen in the Nasdaq index is actually due to a lot of talk around AI or artificial intelligence. I think if you look at the Nasdaq index itself, almost I would say 70 to 80% of the growth in this index just in the last 6 months, 6 to 8 months time has come from the top 7 to 8 companies. And these are obviously the most popular companies, the Apple, the Googles, the Teslas, the Nvidias.
Absolutely.
We do believe that I think AI has a big role to play. And I think a lot of these companies, these sort of big technology companies, are best positioned to really exploit and really make value of artificial intelligence as it grows. So we do believe that I think that has really played a big hand into whatever growth you've seen in the index over the last 6 to 8 months time. And I do believe that overall, yes, they sound like technology companies, but we believe that they're also very diversified. Take an example of something as simple as an Amazon. They have a financial services business. They have a
Absolutely.
pharmaceutical business, they have a retail business, they have a cloud business, which is a B2B business. So I think today, at least the way things are, I think sector category is very confusing for this segment. So we do believe that I think investors who are looking at more growth oriented companies, growth oriented industries, are looking at betting on innovation. I think Nasdaq stands the best, at least in terms of its track record and also going forward.
Pratik, after 27 years in the markets, I have learned one thing. Just keep it very simple, stick to basics, and invest in quality, remain invested for a long period of time, and do this as periodically as possible. Book the least amount of profit that you can and ride this momentum. And you very rightly say that you see Nasdaq is the future of not only all technological growth, but also of growth beyond the corporate space. All over the last 30 years or so, if you look at the technological innovations that have changed our lives for the better, have all originated from mostly Nasdaq oriented companies. This is not to say that the S&P 500 has not done that well, but the Nasdaq has far outshone its larger, bigger and older peers, and that's the reason why the returns that you see that Mr. Oswal has garnered over the last 10 odd years have been fantastic. Let's again visit that graphic. It's a 22% CAGR that this fund has clocked over the last 12 years, and a stunning number will just hit your screen. If you had just done a 10,000 rupee SIP from March 2011 onwards till about July 2023, the corpus would have been 14.4 lakh rupees, and that amount would have been 57.7 lakh rupees. That's the kind of return that happens passively without troubling or tickling the market a lot, and that happens easily without you losing sleep. So these are the kind of investment themes, products and ideas that we discuss on this particular show, and of course we get the gentlemen and the ladies behind this fantastic performance. Pratik, what else? How is Nasdaq 100 ETF now structured? I believe there is still a restriction by the Reserve Bank of India on how much one can invest. Are you still accepting SIPs?
Yes, yes, yeah. So what has happened is, as an asset management company, we have to obviously comply with mutual fund regulations, and this is AMFI, SEBI, as well as RBI. And I think as per RBI, there were certain limits put in place in 2007, which we have to adhere to, and the industry as a whole has come very close to those limits. But having said that, I think we as an AMC, the ETF obviously is open, and we are accepting, I would say transactions for anyone who wants to come in at whatever amount in an ETF. We also have a Nasdaq FOF. Basically, we have
Yes.
two sort of options for investors. One is an ETF option, which is basically like buying a share.
Yes.
The other one is an FOF, which is like buying a mutual fund. And the
Yes.
FOF also is only accepting SIPs right now. So investors who are looking at the Nasdaq fund and who's looking at SIPs, can go with the FOF as well. So there are two funds that we have. We also have an S&P 500 index fund, and that is also accepting SIPs. So if someone is looking for a more broad-based fund, they can look at the S&P 500 index fund. But essentially, this is what it is. We await new regulations. It's been a while, but I'm very confident that we come over the next few months, coming with higher sort of limits so that we're able to sort of accept more money from investors.
So there are two ways to invest in this product. Should you, understand the product that we've discussed. One is, of course, you tell your broker to buy the ETF which is listed off the markets. But there is also another option available, which is the fund of funds that you can buy via the AMC, and that's via the SIP route. At the moment, lump sums are not being accepted because that's the restriction placed by the Reserve Bank of India. Two more data points I'd like to point out. Nasdaq 100 ETF by MOSL AMC is India's largest international fund, about 6,400 crore rupees worth of assets in the ETF. And if I'm not wrong, Pratik, the fund of funds for this ETF is 4,000 crores. Am I right?
Yeah, just over 4,000 crores. That's right.
Okay. And how many monthly SIPs are you getting in the fund of funds for this ETF?
So unfortunately, we last year we had to, close our funds for both lump sums as well as SIPs. Last year at peak we had close to 1.8 to 2 lakh SIPs, and these are transacted SIPs that are investing in the fund. So we had a huge base of clients who are looking at this fund, both of these funds, the S&P as well as the Nasdaq FOF, and we have almost about 3 to 4 lakh investors, a little bit higher now, that are investing in this fund currently. So yes, in terms of wealth creation, in terms of the broad basing, we have a lot of interest coming in this fund. And again, I think over the last few months, since the restrictions have been eased a little bit, we are seeing a lot more interest coming in this fund again. But yes, I think overall, I think we're seeing very healthy numbers from retail investors.
It's a wonderful conversation, Pratik, that just we had on this fantastic product that was devised by MOSL AMC. And we wish you all the best. Let's hope the restrictions are lifted quickly and Indian investors can participate in the fantastic rally that we are seeing in the US markets. Remember, India is at a record high. There is still a long way off before the Nasdaq and the Dow Jones respectively reclaim their all-time highs. They will. And the best way to track that rally is via a simple ETF. It's a compounding machine available at a very low cost of fee management, and you get the invisible kicker of the rupee depreciation versus the dollar. Thank you, Mr. Oswal. It's been a pleasure hosting you. I hope you've had equal fun.
Thank you so much. Thank you for having me.
So that's it, ladies and gentlemen. On this show, like I said, we often introduce to you products and instruments that harness the magical compounding powers of equity in the least possible effort, and they give you the maximum possible return. Do remain glued with us and do watch us on a regular basis for these wonderful ideas that make supernormal returns. Thank you for watching.